Hey, how are you doing? I'm James, a certified public accountant, and I want to thank you personally for checking out my YouTube channel. Today, my video is about cryptocurrency and the changes that the Treasury is going to impose, potentially, in the next coming weeks. I should say, this is my own opinion. This is not financial advice, and this is just what I have strung together over this week watching the news. I think you're going to see a lot of different cryptocurrencies end up going by the wayside or potentially pretty much killed off because of these regulations and how I think they're going to be structured. It's going to be good news for the cryptocurrencies who have KYC implemented and it's baked into the system. Otherwise, I think we're going to see some, pretty rough changes coming from the Treasury. So how I pieced this together this week, it first started off hearing about people getting IRS letters, notices in the mail, particularly clients who traded with Coinbase. Coinbase has historically issued a 1099-K. This is an article I found referencing, the situation that's going on. What that form is it's simply stating your gross receipts. So if you traded on Coinbase and you sold any cryptocurrency, let's say you bought Bitcoin for $20,000 back in the last bull run. Well, if you ended up selling it at $6,000, Coinbase is saying that you owe tax on $6,000. But the way the Treasury guidance is telling us how that would be taken care of on the tax side is that you bought it for $20,000, you sold it for $6,000, you have a $14,000 long-term capital loss. So these people are getting basically taxed on income that isn't actually representative of what happened in real life. So Coinbase has come out, and per this article, they're basically saying they're going to be moving to a 1099 miscellaneous. Okay, that's great, but this still doesn't solve the issue of the basis for the cryptocurrencies. If the IRS and the Treasury are going to treat these as property, Coinbase really needs to issue a 1099-B. So it'd be very similar to a brokerage statement. And it'd be very similar to keeping track of stock. But as we know, cryptocurrency isn't necessarily stock. The SEC is, still ruling on XRP, trying to make that determination. Bitcoin is said to not be a security, but the Treasury still has treated it as property since 2014. So in this article, as we go down, it says Coinbase will be issuing a 1099 MIS form to customers who have received $600 or more in cryptocurrency through Coinbase Earn, USDC rewards, or staking income during 2020. So what this effectively says to me is that Coinbase is not going to be issuing a 1099-K or a 1099-B. As a matter of fact, Coinbase is not going to be issuing any sort of tax form for your cryptocurrency unless your cryptocurrency or your money within your account was earning some type of interest or staking income. But there's something further going on here, and as we take a look, I think it'll become clear. So we get to this news. This is all in the same week, mind you. Coinbase is suspending all margin trading tomorrow on the 25th of November due to recent regulations by the Commodity Futures Trading Commission. The Commodity Futures Trading Commission is a commission that basically governs forwards and futures contracts. So when I saw this, again, I kind of thought, well, interesting. What is traded on futures and options is also Forex, so foreign exchange currencies. In my mind, it immediately jumped to, I'm pretty confident that the Treasury is going to rule that cryptocurrency is a currency. Now, what that's going to do for all of us long-term holders, or my clients who have holdings, who've held, Bitcoin for multiple years, any of these currencies, Ethereum, XRP, depending on the legislation or the rules that the Treasury or the regulations that Treasury sets out, if they treat the tax treatment and they retroactively backdate this for 2019, or they say it's for 2020, any long-term capital gain, in my opinion, and this is not financial advice, this is not how to do your return, because there is no guidance out there for this. It's going to come possibly in the next week, but you won't have long-term capital gain. You're going to have ordinary income when you sell your cryptocurrency. So how did I get to this conclusion? Well, this is my presumption. We don't know until it's going to happen. But foreign currency right now falls into Section 988 of the income tax rules. And basically, it's completed separately and treated as ordinary income or loss. Now, mind you, when you're buying foreign currency anywhere, you're not going to be getting a 1099. The law says basically, if you're just purchasing it or exchanging it for use, they're not required to give you a 1099 at these brokerages for Forex. So you take with what I just talked about earlier in this Coinbase article, they're basically saying we're not going to give any basis to the IRS with this code section of the current currency exchange. I mean, I think this is where they're headed. All right, now that I've explained that, let's go to the current tweets by Brian Armstrong. Brian is essentially saying that they are wanting to regulate this industry and treat this as you are transferring money to another individual. It's basically saying these proposed regulations are making cryptocurrency actual currency. This news, coupled with the fact that just recently, if any of you are familiar with this, Ledger hardware wallets are having a 40% off sale for all their hardware wallets. They don't typically do 40% off. I mean, this is a substantial amount that they're taking off, and their products were pretty reasonable to begin with. As a matter of fact, I think you can get the Ledger X for under $80 shipped with this 40% off code, and that just recently came out. So people know what's going on. There's been talks about this for a long time, apparently, and now we're just publicly coming out with this. And so, mark my word, I think this is why you're seeing some of the other cryptocurrencies, like XRP, having a massive bull run. I mean, you're talking about, let's just go to CoinMarketCap right now. In the last 7 days, XRP has grown 83%. This is the only cryptocurrency out there who literally, since the inception, has been working with banks to get KYC implemented within their distributed ledger. This is all set up to go. This will work with these regulations that are being proposed. I don't know what's going to mean for the grander market, but you can extrapolate a lot of things from what I'm saying right here. So with that in mind, I want to bring you back to Section 988 of the tax code, and I'm not going to make this complicated. I'm a tax guy. This isn't any financial advice, but this is where I think that we're headed. And in order for me to give, my opinion to you and ways that you can look into this, I'm just, we're all just going to have to guess. This is up in the air. This is not a definitive way of how things are going to be treated. This is not tax advice. But Forex, foreign currency, gain or loss, falls under Section 988. And because it falls under Section 988, it's computed separately and it's treated as ordinary income or loss. For anybody who has substantial gains in cryptocurrency, you're not going to get your 20% preferred capital gains tax rate and nothing more. I don't know when they'll do the cutoff date, when they'll propose it, but if you have a substantial gain for your cryptocurrency, you can count on it being taxed now, potentially, at the normal income tax brackets. Like I said, this is going to cause issues because if they retroactively date this to 2018, going to have to file amendments for people's returns. There's going to be a lot of tax that hasn't been paid. If they got hit at 20% or 15% or even 0% wherever their income came, you're going to have to recalculate that. There's going to be tax paid. As I said, it's going to be a bummer for a lot of people who've held on to their cryptocurrency who wanted that preferential long-term capital gain treatment. Now, you extrapolate this. Tax laws are developed to impact the markets, to impact what either the Treasury or Congress wants to have happen. So, as we understand the things that I've just been saying with the news that just came out recently, let's look at the market here. So, again, not financial advice. This is just my own opinion. Talk to your own CPA, your accountant. He can look at your situation. He can offer you advice or not, but he can definitely give you some pointers. And so, in the case that what I just talked about actually happens, I think that you're going to see XRP take all of the market cap. I don't foresee what I know about these individual currencies. Bitcoin can't comply with KYC. It's not going to work. Sure, a company can be in charge of Bitcoin. They can hold it for you. And that's really where this is going, because as I just said, if you have a Ledger wallet and you have your currency off of the exchange, Treasury doesn't want you to have your money off in exchange. It's the equivalent of hiding money in your mattress. People have currency off the exchange typically for security right now. I mean, a lot of these exchanges weren't regulated in the early days. Coinbase is becoming pretty stringent on their regulations, but you're still entrusting your current cryptocurrency to a third party. With this in mind, if you have your cryptocurrency on a ledger, Nano S, Nano X, and then you go to transfer it to Coinbase or wherever, if this change happens, they're going to want to know where you got that cryptocurrency. And so you're going to have to give them some sort of document as to where you got it, where you transferred it from. You're going to have to show where you bought it from, the wallet ID, and then when you transferred it to the wallet that you currently have it sitting in, and then the Ledger wallet ID, you're going to have to show transferring it to Coinbase so they can verify it's legitimate, that you're not the third-party actor, or you're not laundering money, or it's not from a terrorist organization. This is why you have, FATCA. There's reasons for these laws, and I get it, but Brian Armstrong is right. It's going to cut down on the innovation. So with that in mind, me personally, I think anybody who owns Bitcoin now should be extremely scared or cautious if you're holding it off of an exchange. You're going to have to prove chain of custody of the asset. I think that's why you're seeing Bitcoin perform very bad right now. The people know, the insiders know, the institutional money knows that something is going to massively change. If you are in assets that are actively being developed and worked on with an actual cohesive entity or a business, XRP is an asset solely by itself that the company Ripple is developing software to utilize the open source asset of XRP. Because they have developed this software and worked with banks and worked with regulators across the world, they're ready for this. They were literally built for this pending regulation that's probably going to come out within the next few days, as far as I have heard, following Twitter feeds, that in the next couple of days we're going to hear from the Treasury. And then from that point on, there's a meeting with the Commodities Futures Trading Commission that they will actually talk about something on the 3rd of December. And so there's going to be guidance. So if you're holding your cryptocurrency in a hard wallet, I personally, this is not financial advice, but this is my opinion, if I had Bitcoin, I would transfer it to Coinbase. It seems like the most secure custodial account that you could possibly have. They've got great security options in their accounts, two-factor authentication. I would get it off of my hardware wallet and I would put it on Coinbase. I would go into this and I would think to myself, okay, what is my gain on this? What did I buy all this cryptocurrency for? What is the market price? I would sit down with yourself and I would say, okay, if I've got long-term capital gains and I've held on to this for a while and saw long-term capital gains, immediately you know the max that you'll be taxed on that is 20%. So in that case, I mean, it tiers up, so you could be taxed 0, 15, or 20 if you fall into those capital gains tax brackets. But if now the Treasury comes out and they issue regulation that says treat all cryptocurrency transactions as currency and tax it as such that it was a foreign exchange currency, a foreign currency, now instead of the 20% max, you're subject to these rates right here, these marginal tax rates. You'll be taxed at a max of 37% on your ordinary income. It's quite a bit. I mean, you might be taxed more than the 20% if your gains are substantial, because you'll have net investment income tax, which is 3.8% on top of that. So you got to make a decision. It's hard to make a decision before the regulations are out. We don't know what's going to happen. It's not like, and I don't, this, it's not like what's going to happen is that right now, if you sell your cryptocurrency and you get your long-term capital gain, that it could be treated as long-term capital gain, because they very well could say anything in 2020 is treated as ordinary income. So just have to wait for guidance. If you think of this in the macro environment of cryptocurrency, if somebody is faced with a higher tax rate for selling their cryptocurrency, they're not going to sell as much of it all at once, which is interesting, because if you're not going to sell all of it at once because you're worried of the higher tax brackets, then you're going to just slowly sell it if you need money over the year. And if everybody is going to be faced with higher taxes for holding their cryptocurrency, the market is substantially going to rise because there's not going to be enough sellers out there to meet the demand of people purchasing it. When these regulations come out, if they're anything like I've talked about now, just imagine what's going to happen here. These are regulations. Which cryptocurrencies are working with the regulators? XRP at this moment is one of the only ones. I think you're going to see this market take off like it's never taken off before. And effectively, the Treasury will have made the decision for everybody as to what currency is going to be utilized. As crazy as it sounds to some of you, I think that's where we're headed. Bitcoin, since inception, has had quite the anarchist movement amongst its users. Governments will not allow such a tool to be used in the way that Bitcoin was in the early days with Silk Road, all these crazy things. They've paid attention to it. And the cryptocurrencies that were developed after Bitcoin saw the downsides of the anonymity. So they prepared for it. They knew that governments would not give up their right to printing their own currency. It's not going to happen. The government's around for a reason. It just wasn't going to happen. And so those people who worked on XRP or Stellar or any of the other cryptocurrencies, there's a certain truth that they realized, but they still wanted to have the technology there to be able to change the way the financial institutions run and to make them more efficient. So this is my take. This is what I would talk to about with some of my clients, just things that I would keep in mind. This is not financial advice for you, but it's something for you to think about. And if you have any questions about tax planning around this, get in contact with your CPA early. Have that talk now. Say, hey, I'm concerned about this upcoming regulation. They're not going to know anything about it, oftentimes, until you tell them, because a lot of CPAs are just generalists. They deal with a lot of different clients, a lot of different industries. And so because of that, you need to be your own advocate. But if you put it out there that you're worried about this, chances are they'll keep their mind open. And when they're in a continuing education course or they see a news article that mentions cryptocurrency, they'll be reading it, they'll get in touch with you, and you'll be much better off, especially if you know about this stuff early and that you can plan. So again, bad news that potentially most of the gains for some of these people are going to be treated as ordinary. On the flip side, if some people have been majorly hurt by investing in some of these cryptocurrencies that have just completely flopped, if they participated in an initial coin offering and it was a scam and they lost all their money, until this point, if they lost $1 million, the IRS would only allow them to deduct $3,000 a year of that loss from their return maximum. If they change this, they're probably going to have to retro date it. I don't know how that will work. They could stipulate that if you had a loss, you could treat it as though it was currency under the foreign currency tax rates. I don't know how they'll do it, but I think that they should allow those people who have massive losses to be able to deduct it as an ordinary loss and take the whole thing against all their income. Again, those of us who would have gains from this, we're going to be stuck in ordinary income rates, but that's going to prop up the market substantially. I would say prop it up more than the 17% tax difference between long-term and the maximum tax rate of the marginal rate. So if you're holding XRP or Stellar or any of these other currencies that are working with government regulators, it might be really good news for you. I don't know. I don't know how the market's going to take this. It's up in the air right now. But if you have to reallocate your portfolio or you're thinking of selling, one way or the other, there's a massive downside here for somebody. If you look at this market, coin market cap, I think you can dictate where the massive downside is and where essentially what I would say are the insiders know what's going on in this market. There is definitely some inside scoop that people know about, and that's why you see a higher rise in XRP and nothing over the last 7 days for Bitcoin. And then you go down and you look at Stellar, and it's the same situation here. So if you have any questions about my thoughts, maybe I said something that was crazy that you disagree with, post down below. I'm going to get some hate from the Bitcoin guys, but hey, I've been following Bitcoin since 2008. It's been a wild run. Please like, subscribe, and I thank you for your time, and I hope everybody had a fantastic Thanksgiving. I just thought I needed to make this video because the news and the market indicators, especially Ledger having a 40% off sell of the hardware wallets, I think that I'm sort of onto something. If you disagree, comment below. If you agree, comment below. Love to hear your take, but professionally, this is my opinion. I think they're going to change the regulation for virtual currencies, and they're going to group them into a currency status. Thanks. Appreciate you watching.